Billionaire hedge fund manager Bill Ackman is making a bold play to position himself as the modern-day Warren Buffett. Through his investment firm, Pershing Square Capital Management, Ackman has acquired a controlling $900 million stake in Howard Hughes Holdings, Inc., a real estate company he now seeks to transform into a diversified holding firm modeled on Buffett's Berkshire Hathaway. The vision: a two-pronged strategy. Ackman's plan involves restructuring Howard Hughes into two main divisions. The first is a real estate arm that will continue the company's core operations in master-planned communities. The second is a holding company that will invest in high-quality public and private businesses. This mirrors the operational model of Berkshire Hathaway, which combines wholly owned businesses with minority stakes in publicly traded companies under a single corporate umbrella. By pivoting Howard Hughes into a vehicle for long-term capital allocation, Ackman is aiming to shift away from the short-term pressures of hedge fund investing. His goal is to create a company that can hold assets indefinitely, generate consistent returns, and have the operational agility to optimize business performance. Governance and compensation, a modern twist. To manage potential concerns about excessive control, Ackman has agreed to cap Pershing Square's voting power at 40%, even though it owns a 46.9% economic stake in Howard Hughes. This governance safeguard aims to balance influence with transparency. Ackman also proposed a unique compensation structure to reflect long-term performance, while initially suggesting an annual fee equal to 1.5% of Howard Hughes's market capitalization. Ackman faced pushback. A compromise was eventually reached. Pershing Square will receive 1.5% of the annual increase in the company's market value, essentially a performance-based incentive similar to private equity arrangements. Imitating Buffett. With a twist. Ackman has long admired Warren Buffett's long-term investment strategy and his success in building a trillion-dollar conglomerate. However, he also believes Buffett's cautious investment style sometimes underutilizes the full potential of Berkshire's portfolio. Ackman envisions a more proactive approach, blending Buffett's buy-and-hold philosophy with hands-on operational improvements. He aims to run Howard Hughes in a way that allows greater managerial influence and strategic reallocation of capital. This timing is particularly notable as Buffett has announced his intention to retire as CEO of Berkshire Hathaway by the end of 2025. Greg Abel is set to succeed him, but uncertainty about Berkshire's future leadership has caused investor unease, evidenced by a 5% drop in Berkshire's stock following the announcement. A long road ahead. Despite Ackman's clear vision and aggressive strategy, replicating Buffett's legacy is an immense challenge. Berkshire Hathaway's valuation of over $1.2 trillion dwarfs Howard Hughes's current market cap of about $3.4 billion. Building a comparable company will require not just smart investments, but decades of consistent growth and reputation building. Adding to the challenge is Ackman's recent setback with Pershing Square USA, a proposed $25 billion closed-end fund that was ultimately scrapped due to lack of investor enthusiasm. It served as a reminder that even high-profile investors face skepticism in public markets when proposing long-term, unconventional investment structures. Can Ackman fill Buffett's shoes? Bill Ackman's attempt to become the next Warren Buffett is more than a marketing gimmick. It's a calculated billion-dollar bet on the future of value investing. His plans for Howard Hughes Holdings represent a bold attempt to construct a new type of investment conglomerate rooted in long-term thinking, strong operational control, and creative financial structuring. While the journey is long and fraught with challenges, Ackman's ambition signals a broader shift in how capital is managed and deployed in a post-Buffett era. Whether he ultimately succeeds in building a modern Berkshire Hathaway remains to be seen, but his bold strategy has undeniably placed him among the top contenders in the search for Buffett's spiritual successor.